Hey everybody, Mark Walters here, and I want to share with you some ideas about free and clear real estate investing. There's a large segment of our population right now that are older, that own their houses outright. And these are people that are concerned about their retirement years. So we're targeting people that don't necessarily need all their money now, but they would like to get payments ongoing to finance their retirement. So we can structure our sales message to them in a way that lets them know that, look, I'm going to help you with your retirement. This is kind of like a capital preservation. If you were to get all your money now and put it into an investment that just dropped, and you'd lose a lot of money, how in the world would you be able to continue your retirement without having to worry about money? Well, what could be safer than real estate? So what I can do is I can buy your property and make you monthly payments for years to come to secure your retirement. So that's kind of what you're going after here. Now, you're only going to be making principal payments, no interest. So every payment you make to them, it's buying the equity. Very powerful for you. Now, if for some reason interest comes up, you can let them know, well, interest is taxable. You know, if you're in a 30% tax bracket, there's 30%, almost a third of the payment that you're not going to get. But your principal payment, in most cases, it's going to go into their pocket because, of course, if it's their principal residence, well, if they're a single person, as I make this video, not giving tax or legal advice here, $250,000 of their gain is tax-free. If they're a married couple, $500,000 of their gain is tax-free. So the payments you're making to them go straight to their bottom line. Very powerful. Now you can market for these people by going after homeowners that have owned their homes anywhere from 10 to 25 years, absentee owners, things like that. So that's very cool. Now, structure these payments so that you're going to at least get a break-even cash flow from your renters, but preferably a positive cash flow. Find out what properties are renting for in the area and then structure the payments that you're making to these people accordingly. You'd like for it to be $600, $700, $800, whatever, so that you really are making a nice monthly positive cash flow. And then, of course, when you're duplicating this and buying several properties, it's very, very powerful. Now, you can let these people know that at the end of the term, if there's still money that's owed to them, you can make them one big payment. Now, that, of course, is known as a balloon payment, but I don't want you to call it that. I want you to call it a nest egg. Let them know, I'm going to give you a nest egg payment. And then they can tell their friends, hey, I'm getting a nest egg payment at the end of, X amount of years. So that's very good, while their friends are thinking, well, how in the world did you set that up? They get some bragging rights. Now, as far as the term is concerned, go anywhere from 10 to 15 years out if you can, longer if possible. And you can oftentimes come close to their asking price when you stretch out the term, but of course, crunch the numbers and do your due diligence to make sure that's going to be the case. But if there is some negotiation on the price, and if they're saying a number that you don't mind paying, you can let them know, well, look, I may be able to do that, but we're going to have to stretch out the payments a little bit. You're going to have to work with me on that. And that, of course, is going to help you with, oftentimes your monthly payment, and it's also going to stretch out the term, which is good, and they're getting what they want, you get what you want. So it's a very powerful position. So I highly recommend that you start targeting free and clear real estate in your investing so that you can do these kind of deals, because you can pay them off faster, and as some of them get paid off, well then, of course, you're just getting positive cash flow coming in like crazy. So it's a very, very good approach. I'm Mark Walters, and I look forward to sharing more with you very soon.